Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Also, based on feedback from one of the viewers who requested for captions, let me try to include it. Do let me know if this works better for all of you. Keppel Corporation has been making waves in the investment world with its latest strategic acquisition. The global asset manager recently announced that its private investment vehicle, Keppel Infrastructure Fund, KIF, along with a co-investor, has acquired a 100% stake in the UK-headquartered Global Marine Group, or GMG for short. This deal was completed with investment affiliates of J.F. Lehman & Company as the sellers. For those of you who aren't familiar with GMG, they're a specialized subsea cable solutions provider. Think of them as the underwater construction crew for the digital world. They install, maintain, and repair the critical subsea cables that carry internet traffic and power across oceans. This acquisition is particularly noteworthy as it marks the first investment by KIF, signaling Keppel's commitment to expanding its infrastructure portfolio. Looking at Keppel's stock performance, shares closed at $6.77 on Friday, down 0.7% or $0.05. This slight dip comes amid this significant acquisition news, which might seem counterintuitive. However, the market often takes time to digest the long-term implications of strategic investments like this one. Keppel has been transforming itself from a traditional conglomerate into an asset manager focused on infrastructure, real estate, and connectivity. This acquisition aligns perfectly with that strategy, particularly in the connectivity space. The subsea cable industry is poised for growth as global data consumption continues to surge and the need for reliable underwater infrastructure becomes more critical. From a technical perspective, Keppel's stock has been trading in a relatively tight range over the past month. The current price of $6.77 sits slightly below its 50-day moving average, suggesting some short-term bearish sentiment. However, the stock remains above its 200-day moving average, indicating a generally positive long-term trend. The trading volume for Keppel has been moderate, which is typical for a blue-chip Singapore stock. Investors seem to be taking a wait-and-see approach to this new acquisition, which is understandable given that it's KIF's first investment. The success of this deal could set the tone for future investments by the fund. When we look at Keppel in the context of the broader Singapore market, it remains one of the stalwarts of the STI, Straits Times Index. The company's diversification strategy sets it apart from many of its peers who are more focused on specific sectors. This acquisition of GMG demonstrates Keppel's ability to identify growth opportunities in niche but essential industries. Now let's shift our attention to Sabana REIT, which has been making headlines for rather different reasons. The REIT has been involved in an ongoing legal battle with a former tenant, and there have been some interesting developments in this saga. For those who aren't familiar with Sabana REIT, it's an industrial REIT that owns and manages a portfolio of industrial properties across Singapore. These include high-tech industrial buildings, warehouses, and logistics facilities. The REIT has been working to optimize its portfolio and improve returns for unit holders in recent years. The latest development in Sabana's legal troubles involves Lin Duan Liang, the former director of Cleo One Solution, which was once a tenant of Sabana REIT. Lin has been sentenced to 3 days in jail for contempt of court. According to court documents, he failed to comply with examination orders and other directions from the court, as outlined in an affidavit filed by Donald Han, the CEO of Sabana REIT's manager. This legal dispute dates back to November 2023 and involves unpaid rent. Lin remained the director of Cleo One Solution until September 2024, when a liquidator was appointed for the company. The court found that Lin had engaged in contempt of court on 3 separate occasions, which led to the jail sentence. Despite these legal challenges, Sabana REIT's units ended Friday's trading session on a positive note, closing at $0.365, up 1.4% or $0.005. This suggests that investors are looking beyond the legal issues and focusing on the REIT's underlying business performance and property portfolio. From a technical analysis standpoint, Sabana REIT has been showing some resilience. The current price of 0.365 represents a modest recovery from its lows earlier this year. The REIT is currently trading above both its 50-day and 200-day moving averages, which is generally considered a bullish signal. Trading volume for Sabana REIT has been relatively light, which is typical for smaller REITs in Singapore. However, there have been occasional spikes in volume, particularly around news events related to its legal proceedings or financial results. In the broader context of Singapore REITs, Sabana sits in the industrial REIT category, competing with larger players like Mapletree Logistics Trust and ESR Logos REIT. Industrial REITs have generally performed well in Singapore, supported by strong demand for logistics and warehouse space, particularly following the e-commerce boom during the pandemic. Sabana REIT currently offers a dividend yield of around 7.5%, which is attractive in the current interest rate environment. However, investors should keep an eye on how these legal issues might affect the REIT's operational performance and rental income in the coming quarters. The broader Singapore market has been showing mixed signals in recent sessions. The Straits Times Index, STI, has been influenced by global factors, including U.S. interest rate expectations and regional economic data from China. Singapore's economy continues to navigate challenges, with the Monetary Authority of Singapore, MAS, maintaining a cautious stance on monetary policy. The city-state's export-oriented economy remains sensitive to global trade tensions and supply chain disruptions. Banking stocks, which form a significant portion of the STI, have been performing relatively well, supported by the higher interest rate environment. However, property and REIT sectors have faced some headwinds due to these same higher rates, which increase borrowing costs. The technology sector in Singapore has been showing some signs of recovery, aligning with the global tech rebound. Companies with exposure to artificial intelligence and semiconductor industries have attracted investor interest. Looking ahead, Singapore's market outlook remains cautiously optimistic. The city-state's strong fiscal position, stable political environment, and strategic location continue to make it an attractive investment destination in Southeast Asia. For investors looking at Keppel, the recent acquisition of Global Marine Group represents an interesting strategic move. The subsea cable industry is essential infrastructure for the digital economy, and demand is likely to grow as global data consumption increases. Keppel's transformation into an asset manager focused on infrastructure, real estate, and connectivity positions it well for future growth. However, investors should monitor how effectively the company integrates GMG and whether this acquisition delivers the expected returns. As for Sabana REIT, the legal issues with former tenants highlight some of the operational challenges that REITs can face. While the current situation appears to be resolving with the court's decision, investors should keep an eye on Sabana's occupancy rates and rental collection metrics in upcoming financial reports. The industrial REIT sector in Singapore remains fundamentally sound, supported by strong demand for logistics and warehouse space. In the broader Singapore market, investors should continue to monitor global factors, particularly U.S. Federal Reserve policy decisions and China's economic performance, as these will have significant implications for Singapore's export-oriented economy. Defensive sectors with strong cash flows may offer some protection if global economic uncertainties increase. That wraps up today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and I'll be back with more updates on the Singapore market. Remember, investing is a marathon, not a sprint, so stay informed and make decisions based on your long-term financial goals. Thanks for joining me today, and I'll see you in the next update.